The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your confidence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. G'day traders, Stacey Burke from Stacey Burke Trading. Today we'll continue our studies with Playbook Best Trade Setups, and we're going to be going over examples, most recent examples of using the inside day, one of the most powerful signal days that traders can use to identify high probability opportunities and best trade candidates. The inside day signal is on page 69 in the playbook. This can help traders to identify potential trend trade opportunities, reversal trade opportunities, larger time frame template best trade candidates, the 3-day setups. We'll be going over some examples of that. And the inside pattern can indicate a smaller trading range, a coiling day, or an indecision day, a market that may be changing directions or coiling for a potentially larger move. And we also talk about double inside days as well in the playbook, and we'll be going over an example of that as well. Page 69, the inside day is a 2-day price pattern that occurs when a second day has a range that is completely inside of the first day's price range. So the high is below the previous day's high, the low is above the previous day's low. The inside day can sometimes be a signal of a potential large move about to happen. Inside day can offer us 2 potential best trades candidates. A reversal trade, a false break reversal trade, which we'll be going over an example of that, a recent example. And we talk about these in the playbook. We go over some different types of examples, and also the opportunity for a trend trade, a continuation trade in a strong trend. Also reinforcing the basic Monday, Wednesday, Friday template. Monday is day 1 in a new week, a new timing cycle. That's the opening range. Tuesday, day 2, typically can expand the range. We can have a signal day on any one of these days of the week, and they can represent different opportunities based on how this template sets up. Wednesday is day 3, the midpoint range of the week, and it resets to new day 1, a new day 1 heading into the backside of the week. The front side is Monday, Tuesday, Wednesday. That's the first half of the week. The backside is Wednesday, Thursday, Friday, heading into the closing range of the week, Free Cash Fridays. Day 1 on Wednesday, day 2 Thursday, and day 3 on Friday. The front side of the template can often be the setup for the backside for parabolic best trade candidates, and the inside day can be a powerful signal on the front side and the backside of our template. Reinforcing, there are only 2 types of templates when the trades are actually set up, whether that be a 3-day setup, that could be a day 1, an inside day, a day 2, a day 3 for a following day parabolic. But it's going to either be a pump and a dump template over the course of day 1, an inside day, a false break, reversal parabolic, any one of those combinations, which we'll be looking examples of, or a dump and pump template. There are only 2 types, dump and pump and pump and dump. So when we put these templates together, or we get a 3-day combination, there will be only 2 types of trade setup presentations. The number one thing to remember is that the inside day is in itself a signal day. So in this example, British pound, we had non-farm payrolls on Friday. This is our most recent examples. And Monday was an inside day. Monday brings our attention. We have a potential neckline at Thursday's close coming across. Tuesday begins to trade and triggers the low of the inside day before pumping back up into our US session window. So we've triggered shorts into the market. They've pumped back up into closing price level. If this market was to give us a low-hanging fruit continuation trade, this would complete a first red day type of template over the course of 3 days, and this neckline from Thursday's closing price would act as trapping volume. Not quite a head and shoulders pattern, as non-farm payrolls is our peak formation. We get a inside day as a signal day. We trigger shorts, they pump back up,
And when we come to our US session, we get our low-hanging fruit continuation trade. And again, as we talked about with first red day, first green day, these trades typically will go into the close of the day. We have other time frame traders driving these moves. So when the day starts, when the week starts, we have Friday's closing price. That's our reference point. That is where everything begins to auction from. All traders have these three numbers when they come to the screen at the beginning of the week, but also at the beginning of each day. We have where the week started from. We have high and low of the previous day. These are the areas where I will look to position myself in the market if indeed one of those pump and dump or dump and pump templates present with a best trade candidate, aligning us with either an inside bar, trend trade, false break, reversal trade, or a larger 3-day template opportunity. London puts a low of day in place after triggering the inside day. That neckline now potentially has trap volume, and there is our potential pump, engulfment, coil, dump. Pump and dump inside of our larger template in our US window for the parabolic continuation trade, the low-hanging fruit trade. Low-hanging fruit, page 96 in the playbook, the trend continuation trade. And this PDF will be available inside of the course to download, so don't worry, this will be being placed in there afterwards. So following that through, we can see that that market actually continued through to the low of the previous week, which was placed, the pump began on the previous Thursday, but this market continued into the close and continued before taking out the low. And remember, understanding that other time frame traders are driving this move. Another example of the British pound in April, we have a Monday that starts our week. Friday closes in breakout. Friday closes in breakout. Monday trades as an inside day. That's a signal day now. We have two signals, a market that's closed in breakout, and we have an inside day. Now, this is a fantastic example of where traders will see the following day. They'll look for a reversal trade. They'll be counter trending the breakout, and then they'll forget about it because it didn't play out. They'll be actually trying to buy the low, thinking it's a false break in a market that's broken out. Very important to understand when a market closes in breakout, how does price behave? Now we're starting a new week, a new template, but we've triggered shorts into the market. We have shorts already driving this move in breakout. We have an inside day, and we've triggered the low of the inside day. The market trades on Wednesday and just slightly triggers the high of day level. Now remember, Wednesday is our midpoint range of the week. Day 1, day 2, day 3 reset. Day 1, day 2 pushes up into that high of day level again before closing as a first red day. A first red day on Thursday. First red day on the backside of our week. Our high of the inside day is still intact as defined by the green box, that pin hammer. The market breaks down again and triggers the low of the week level. We now have lower lows in place. Now remember, there are two types of templates where on Friday, the closing range of the week, it's either going to be a dump and pump or a pump and dump template. When the opportunity presents, it will either be a dump and pump or a pump and dump template. Now, I also just want to point out, do you notice we're talking about the larger template here? We're not talking about little candles and little bars and pushes, things like that. Inside day, we have a market and breakout. Inside day, day 1, day 2, day 3, lower low. Day 1, day 2, first red day. First red day is a high of day, high of session shorting opportunity. If indeed it presents, we have a lower low on the inside, which is the template for the pump and dump. Heading into our New York session on day 3, the third session on Friday, the closing range of the week. The US session will close out the week. We have our basic model for trade entry criteria, page 29 in the playbook. Into our US window, the coil at the previous day's closing price. Up top, back inside of our EMA for the parabolic collapse, closing out the week. Again, noticing market goes parabolic into the close. Zero stress, zero heat, but the inside day is a powerful signal that held the entire week into the closing range of the week. This is from the previous week, a Fed week. Understanding again, heading into the closing range of the week, Friday put a high of week in place. That is a day zero template, an outside day. Parabolic trend trades, the day zero setup, page 84 in the playbook. And that forms a peak formation high, peak formation low, and a coil inside. We have an inside day on our Monday. The market triggers the high of day, again, the false break reversal before breaking out at the close of Tuesday. Heading into our Fed Wednesday, that reversal closes as a first green day. So again, the parabolic breakout after the false break, a day zero template. That's the coil, peak formation high, peak formation low. The coil, an inside day, the false break before collapsing down in our US session. On the front side, peak formation reversal on the Fed closing as a first green day, and that also traded as an inside day. Now, you've heard me say this in the past, a market that coils sideways underneath the high of the week, low of the week, or high of day, low of day levels is potentially preparing for an explosive move. We have a larger weekly dump and pump template. Day 1, day 2, day 3, reset. Day 1, day 2, into the backside of our week, coiling, heading into a non-farm payrolls Friday for a potential explosive parabolic move. Higher highs on Friday. We've already triggered the high of the inside day. Breakout traders are in the market. Our coil is in the long direction heading into non-farm payrolls. Now, we've talked about not obviously trading in front of major red news. One of the reasons I've put this in here is to demonstrate to traders to not counter trend the larger template, but also front side we can get inside day. We can get an inside day on the back side. There were opportunities potentially for an early entry into this market and still be safely protected or managing your risk or exiting prior to the non-farm payrolls release. And this is another example of where major red news can be the catalyst to complete the move. My emphasis here is demonstrating where the inside bar takes place, but also to not be counter-trending a market that is about to go on an explosive parabolic range expansion. The Dow Jones 30, we had a large breakout on the previous Thursday, a parabolic collapse after first red day that closed in breakout. Friday then proceeded to trade as an inside day, again a signal day. And this template itself shows up quite often, an inside day on a Friday, sometimes a Monday, peak formation low, inside day, trigger breakouts into a new week, trigger longs into the market, hold them up there. You'll notice the lower low at the end of the session before coiling sideways. Remember, I've said this repeatedly, train your eyes to move sideways. Day 1, day 2, day 3, major red news is a death candle that traps all the volume up top. This gave traders in the New York session, third hour, an easy parabolic collapse after our signal day, trapping volume up top. Again, the close of the inside day acts as a neckline, trapping volume up high. Our 5-minute chart, the major red news, the lower low before pumping back up third hour, and the parabolic collapse back through the low of our peak formation day on Thursday. And again, closing at the low of the day. An example from this week on gold, Monday breaks out. So we had a non-farm payrolls Friday, a short squeeze reversal on Monday that closed in breakout. That market proceeded to pull back inside. That became an inside day. This is an excellent example that gold will often use. We've triggered shorts into the market. We saw that example just in a few recent slides where the shorts were triggered into the market. The high of the inside day held on the Monday. But this is an example of where the market works into the low inside of our Monday's range. We're inside of Monday's high-low range. This is coiling sideways, and this is where I've talked about often we'll see a short squeeze reversal on a Thursday on a lot of instruments, but gold commonly. This market also closed in breakout, another signal, trapping breakout traders in the market before exploding on major red news back through the lower highs. That first explosion is major red news on our Thursday. Observing also this larger coil preparing for an explosive move, the dump and pump potential template, a higher high at the beginning of the week that begins to dump down. Inside day, trigger shorts into the market. Longer time frame traders. Market closed in breakout. Major red news stops out lower level shorts. The higher high is now the dump and pump coil heading into our New York Open at the high of day level, an explosive breakout through the high of the week, coiling sideways again and continuing into the close of the day. Another example of a market to not be counter trending once that explosive reversal is in progress. The Aussie dollar this week is an excellent example of using the calendar. There were major red news on the Australian dollar Monday evening, North American time, Tuesday morning, Australian time. Non-farm payrolls again, the vertical explosive breakout and inside day on Monday, triggering inside day longs right off the beginning of the day before breaking down and heading into the news that market went parabolic through the low of the day. So they've triggered longs and hit the stops on breakout traders immediately using the news as a catalyst. But then the market has broken down before pumping back up into our U.S. session. Another potential low-hanging fruit opportunity. Day 1, day 2, day 3. We've already have an outside day. We have lower lows. What happens when we come to our timing window in the U.S. session? The market is broken down. Major red news. We've now broken out lower lows. This market pumps up from the London window, coils sideways again. Train your eyes to move horizontally. Just after our 12 candle window, the market breaks down and continues to trade lower, not only into the close, in breakout, so we're outside of the previous day's range, the inside day's range, and continues to go lower into the following day. The inside day trigger. An example on the Japanese yen from the end of March, a large range outside day, the day zero template, peak formation high, peak formation low, and then consolidation. We had an inside day on the Thursday, another inside day on the Friday. That's the double inside day. That is a telltale, we talk about that in the playbook, of a potential reversal setup possibly happening. A double inside day inside of our large range day. In our Monday, we have an ascending triangle coiling just above closing price. We have an early first hour opportunity that continues to coil after breaking out into the second hour, the 9 a.m. hour, going parabolic right at the beginning of that second hour. Again, timings, levels, behavior of price, rotation of the new hour. We see an additional opportunity to add in for the explosive breakout after our double inside day coil. Again, a very powerful signal day. Important to understand where you're at in those templates. But when we get an inside day, that is a potential signal to either an opportunity in the following day in our session, false break, trend trade opportunity, or a larger template building an opportunity that could go on a range expansion parabolic opportunity driven by other time frame traders that can trade right into the close of the day. Keep it simple, traders. Signal days, very powerful signals, whether they're first red day, first green day, inside days. This PDF will be available in your course PDF area, and may the markets go with you.